What if I told you there's a profitable company in Singapore that dominates its industry, pays you a 6% dividend, holds more cash than debt, and still trades below book value? This is not a tech moonshot or risky REIT. It's a household brand with products you've probably eaten, and yet almost no one is talking about it. Let's uncover why QAF Limited might be one of the most underrated income stocks on the SGX. Hey investors, welcome back to Durian Finance, your guide to smart investing across Singapore, Malaysia, and beyond. In today's video, we're breaking down QAF Limited, the company behind Gardenia Bread and Cowhead Dairy, with operations across Singapore, Malaysia, the Philippines, and Australia. We'll cover its business model, latest financials, hidden strengths, and whether it's a smart buy today, especially if you love stable dividends and undervalued stocks. Let's jump in. Disclaimer: this video is for informational and educational purposes only and does not constitute financial advice. All opinions are the creator's own and based on publicly available data at the time of recording. Always do your own research and consult a licensed financial advisor before making any investment decisions. The creator is not responsible for any losses arising from reliance on this content. QAF Limited is a major food company across the Asia-Pacific region, with its structured business split into bakery, distribution, and warehousing, plus investments and others. In bakery, they produce both branded packaged and unpackaged bread, specialty French-style frozen and par-baked breads, pastries, and confectionery goods. They have 16 factories spread across Singapore, Malaysia, the Philippines, and Australia, one of which is a state-of-the-art automated bread plant in the Philippines, opened in 1998. Their bakery segment carries household brands like Gardenia, Baker's Maison, Delicia, New Bake, and Squiggles. Gardenia, founded in 1978 in Singapore, became a commercial bakery by 1983 and has since become a market leader across Singapore, Malaysia, the Philippines, and Brunei. They deliver fresh products daily to roughly 79,000 to 81,000 retail outlets, including supermarkets, convenience stores, mini-marts, petrol kiosks, caterers, hospitals, hotels, schools, and e-commerce platforms, backed by a modern fleet of over 2,000 trucks and delivery vans, with some cities served via roll-on/roll-off nautical highways. Quality control is top-notch. Their famous G-Lock color-coded clips indicate bake dates, production facility, and best before information, ensuring product freshness. Aside from bread, their distribution and warehousing business imports, distributes, and stores food and beverage brands in region, backed by cold chain logistics. Overall, QAF employs around 9,000 staff across its operations, running 16 highly automated factories upgraded for hygiene and food safety. Now, let's talk numbers, and the details are compelling. In FY 2024, QAF raked in 636.11 million Singapore dollars, just 1% higher than FY 2023's 628.6 million Singapore dollars, showing stable top-line performance. The real standout is EBITDA, up a whopping 24% from 48 million Singapore dollars to 59.6 million Singapore dollars, pushing the margin from 7.6% to 9.4%. Proof of tightened cost controls and productivity gains. Let's break that down. The core bakery segment generated 456 million Singapore dollars in revenue, with EBITDA growing 3% to 58.2 million Singapore dollars at a 13% margin. Meanwhile, the distribution and warehousing arm earned 168 million Singapore dollars and delivered 8.1 million Singapore dollars in EBITDA at a 4.8 to 5% margin. QAF also received notable insurance payments, RM 22.4M, for flood damage claims in Malaysia, aiding profit growth and reducing past loss provisions. At the net profit line, earnings soared 26% to 34.7 million Singapore dollars, lifting EPS from 4.8 cent to 6.0 cent. What about liquidity? They closed FY 2024 with 209 million Singapore dollars in cash and gross debt of only 32 million Singapore dollars, resulting in a net cash position of 177 million Singapore dollars and net gearing of 0.36 times. That's a balance sheet built like a fortress. Even during the first half of FY 2024, Revenue grew from 301.6 million Singapore dollars to 309.2 million Singapore dollars. EBITDA more than doubled from 13.1 million Singapore dollars to 27.9 million Singapore dollars. And profit after tax jumped from 4.9 million Singapore dollars to 12.5 million Singapore dollars. They also slashed advertising spend by 9%, while benefiting from 32% higher interest income, totaling 9.4 million Singapore dollars, from higher cash yields and insurance receipts. In summary, solid top line, leaner operations, robust profitability, and a pristine balance sheet. That's exactly what income-oriented conservative investors look for. Dividend and valuation. The board declared a 5-cent dividend, giving investors a 6% yield based on the current price of 85 cents. The payout ratio? Just 83%. Sustainable for a consumer staple company. Now here's where it gets juicy. QAF trades at a PE of just 14.1x, EV/EBITDA of 4.25x, and price to book under 1. You're essentially getting a company with strong brand value and recurring income for below its actual book worth. Growth and expansion. What about growth? The company isn't just coasting on its bread empire. They've been launching new health-conscious SKUs like low GI breads, instant noodles in Malaysia, and even frozen baked goods in Australia and the Philippines. They're also expanding in e-commerce, vending machines, and increasing exports, a smart hedge against saturated home markets. Nothing is perfect. Foreign currency losses, mainly from AUD cash, hurt their results by 8.8 million Singapore dollars in 2024. Also, their growth is slow, just 1% top line. They need continued innovation and export expansion to break that ceiling. But given the high dividend, solid cash flow, and low leverage, the downside risk is very manageable. So what's the takeaway? QAF is not a moonshot, but it's one of the safest yield plays on the SGX, with recession-resistant products, dominant branding, and a balance sheet that rivals some banks. And with a yield beating CPF, REITs, and T-bills, this could be the income-generating anchor your portfolio needs. If the market re-rates QAF to even 1.2x book value, that's a 20% capital upside, plus 6% yield while you wait. Smash that like button if you learned something new. And subscribe to Durian Finance for deep dives into undervalued gems like this. Comment below. Would you invest in a stock like QAF, or do you prefer growth over dividends? Thanks for watching, and see you in the next video.